Okay, I recording this video Sunday 17th of November 2013. Hope you had a great week's trading. I've been in the UK all week, just catching up with friends and family. It's always kind of fun to see what's going on in the UK, London and abouts. Must admit, I'm glad I don't live there anymore. It used to kind of years ago, but it's not for me anymore. And didn't really have a good enough internet connection anywhere to do any trading or record any videos and upload any videos. So, when your head's not in the game as well, it's kind of best just to stay away. So it was interesting to watch a couple of days, see what's kind of going on, but didn't trade any of it. Breaking to new highs on the E-mini though. So what I thought would be useful this weekend was just to run through the multi-market stuff. So show you what I'm seeing on my charts in terms of daily and weekly charts. And this is in terms of, first of all, the currencies, to see where the money is flowing kind of geographically, and then look at it in terms of markets and where the money is flowing in terms of the investable markets. And the nutshell version is this, that it's all kind of flowing into the pound and the US dollar, and it's kind of equities and flowing out of pretty much everywhere else. But let me show you the charts and kind of explain what I'm thinking. So first of all, here's the pound. The last decent video I did on the pound was just as we were breaking back up to this 161, 162 level, and then we put in this little pullback to end of trend sequence at 162, and we fell away as soon as that video kind of came out. But we're back in the zone. 159 was an area where the professionals kind of came in and goosed it up here. It held last time around, and this time around, we had a little bit of a spike through it, and then they picked it up. The professionals picked it up, and you can see the last couple of days, Thursday, Friday, we broke through those highs. So they were seemingly getting involved, in that blue professional bar and buying it up. And the reason for that, we saw Mark Carney, who's the new, he's the Canadian, but he's the new governor of the Bank of England, speaking on UK media on Wednesday or Thursday. Just about, they think there's the beginning of a new recovery, a new kind of not a boom, but just a little bit of strength in the English economy kind of going on, at the UK economy going on at the moment. So seemingly, the money's flowing into the British pound, and let's see, 162 is this kind of critical level. Been talking about this. It's been resistance for a number of years, and the reason why I don't think it's over is on the weekly chart we've not seen blue professional bars and exhaustion patterns at the highs up here to say they're taking profits and this is heading down. This is holding above resistance on the weekly chart. We got this little congestion pattern kind of going on here. We've been in this zone 59 to 62 for a while, so let's see if we can kind of get through it this week or the next week through 162. So that's what I'll be looking for on the pound. Then in terms of the other markets, the other currencies, they're all looking pretty weak. We've got the euro here. The euro, I was bullish on the euro for a while. I was saying 134 was a critical level. We got through there, and then 135, 136, and so on. And we had this kind of decent break. It was breaking above resistance on the daily and the weekly chart here. But then we had a U-turn pattern come in. You can see we had this real sell down at 138, blue professional bar. Getting out of this, all of a sudden, a lot of weakness kind of going on here. Now we've broken through support on the daily chart. We've come back up above it, but we have kind of broken through. Let's see how this plays out. My guess is we're going to break through the 133 level here. All we've done is come back into that kind of zone. There was so much selling, kind of exhausted the selling kind of temporarily. I don't think it's all done on the downside because we've not seen a blue professional bar down yet. We'd need to see a bullish divergence at something to kind of stop this thing kind of going forward. So I'd expect this thing to break through 134 sometime this week. And all of this is kind of driven out of the Mario Draghi ECB news. That was on this particular day here, where essentially people are worried that the ECB is going to go to proper QE. They're doing it through the back door via the banks at the moment, but it seems like it might be a full-on kind of in-your-face QE type program kind of going forward. And they did cut rates and talking about deflation in Europe and so on. So all of a sudden, people got a little bit scared about the macro environment in Europe. So let's see how this blue professional bar, the high and the low of this one, kind of plays out. It would be unusual that this is just a spike down and we kind of just go through the highs of this blue professional bar. I think we need to put in some kind of bullish divergence and test this 33 level and come back up if that were really in an uptrend. But my guess is we'll break through 33. So that's what I'm going to be looking for this week on the euro. Yen continues to weaken. I know that we put in pullback to end of trend on the weekly chart here, and we've got exhaustion on our left shoulder and all that kind of good stuff. But if you look at the commitment of traders numbers, they're very heavily, against the yen at the moment. So I'll show you that in a second. And we dropped through support here at 101. The parity level against the US dollar is kind of key. This is on the futures contract. When you look at the cash, it's 100 versus the yen. And I just think we're going to be playing with these lows. I don't think it's going to, I don't know if it's going to just continue dropping like a rock. I think down here in the mid-90s we've got some kind of support at some level here, but we have broken through support on the daily chart here, so we're in a downtrend on this daily time frame. Let's see if we're going to catch it on the weekly chart kind of going forward, but for the time being the yen is weak. Aussie dollar is also weak, so we did find some support here. It was a pullback to end of trend on the daily chart, and we put in flush patterns and so on. All of that was good. We had an amateur down bar and then raced away to the upside. But I did say that coming in between kind of the high 90s to parity level was going to be a key level that the sellers would come back in. Exactly what happens. 97 just up here, we kind of couldn't get through there. Blue professional bar selling down at that point, and we've continued through a support level here. This pullback level got broken, so we're in a downtrend, continuation of this downtrend, and this is going to loop around. We'll have on the weekly chart support resistance kind of come in. The fast and the slow line will join together, and we'll get some downward pressure from the weekly chart as well. This is not over because we've not seen blue professional bars or exhaustion selling on the downside kind of come in yet. All the blue professional bars on the weekly chart have just been selling down this 102 and parity level, selling down through that move, and that was absolutely key. We've just come back into the bottom of that zone, and we're going to follow it down. So the Aussie dollar is looking weak. The loonie, which tends to move a little bit kind of close to the Aussie dollar because they're both commodity-based currencies, a little bit stronger, but still in a downtrend. It looks like my charts are just refreshing kind of momentarily there. We're through the support level on the daily chart, so that just shows it's weak. This is a blue professional up bar, and that we have come back down through the lows in here, so that little bar they used that to kind of get short. This 93, 94 level down here is going to be key. We got some kind of cyclical support in due at some point, but this still, because we're below support on the daily chart, is kind of weak, and we're in a downswing. Resistance to support on the weekly chart. And then lastly, dollar index. So the only strong currency that I can see in that whole group is the pound. The euro is kind of weak as well, and the euro is the largest component of the dollar index. So we'd expect to see a little bit of strength on the dollar index. And the way I see this here, we've broken through resistance on the daily chart here, blue professional up bars. We've come back into that zone. And dollar index, I don't think we're not done on the downside by any means, because we haven't had the blue professional bars kind of coming at the lows, exhaustion patterns and so on. But I think we're going to go through some period of strength, probably until the weekly chart resistance starts to play in on the weekly chart here. So I'd expect the dollar index just to strengthen a little bit. But really the sign is this, that these blue professional bars hold at this point here. We come back to the highs of those and make it through 81.5. That will show that we got a little bit more strength on the dollar index there. But depends on the euro and the yen. Those are the kind of the big components of the dollar index. So again, this week I'll be looking to see that this kind of 80 level kind of holds, and we start to move back up through the highs of that. So also, because we've got a weekly, these are looking at kind of weekly patterns, let's just look at the commitment of traders on this. And this is dollar index, commitment of traders, and you can see this is what happened. Remember, on the commitment of traders numbers, I take the professional numbers, flip them upside down, because it makes more sense to me when I'm looking at this kind of for swings in the dollar index itself versus what the professionals are doing. And you can see that blip up in what the professionals were doing this week. So that shows that they're kind of supporting some kind of temporary strength, at least in the dollar index. If you rip through the other ones, you can see, look, we're below the zero line here. We're negative on Canadian dollar, so that's kind of weak there. Aussie dollar, same thing, weak, kind of going down through there, negative there. We've got British pound. It's come back to the zero line. It's -1 on this reading here. I suppose I prefer that to be a little bit stronger and not to have printed a bearish divergence. I don't think that's necessarily a little bit of an exaggeration in terms of the weakness. I see the chart as being stronger than that. Commitment of traders numbers is showing. Yen, this is why I'm saying the yen is still weak, because look the way the commitment of traders is positioned here. So kind of making new negative numbers down here, that's not good. So that's not supporting a rally in the yen. And then lastly, euro. So same thing on the euro, kind of down here at -2. That's pretty weak. Same type of reading on the British pound, and I see the euro chart as being a little bit weaker than the pound. So some difference there in terms of what I see, but that's that's showing the professionals are potentially supporting some temporary strength in dollar index at least. So there we go. So money flowing into the US and into UK. In terms of where it's going then, so because we've got the dollar index is strong, gold and silver, which are anti-US dollar, you'd expect them to be weak, and I think that's the case. We're trying to find a bottom seemingly on gold here in the 1200s, but we've got pullback to end of trend to make. We've got this downswing to kind of put in, and we've not seen blue professional down bars in the recent past here. We're very close to this support level on gold, which could break, and that would kind of bring in some more selling, which is maybe what we need in order to bottom this market out. But still got pullback to end of trend, I'd suggest to run on the weekly chart here of gold. And silver, it's a little bit stronger in terms of the pattern. Again, pullback to end of trend on the weekly chart, still got to run, and we broke our support here on the daily chart, blue professional down bar, exhaustion selling. So before this has got to turn around now, we've got to see a bullish divergence pattern, we've got to see pullback to end of trend on the daily chart kind of here, and maybe that's syncing up with some kind of support on the weekly chart would make sense. But it's trying to find a bottom, but I've been saying, there's some amateurs, unfortunately, who are into this market way too early. We had these amateur bars up into those pullback levels on both silver and gold into there, just showing the amateurs were getting excited at this kind of phase, thinking that the bottom was in and no, we've got pullback to end of trend to make on these charts yet. So dollar index is kind of strengthening, so gold and silver we'd expect going down, plus the things that are priced in US dollars, which is crude and copper. Now this is hurting me because I'm sitting on a it's a long-term position on crude, so I'm taking quite a lot of heat on this, and really I should have been out of this. It was a good call when it broke up through 98s and it ran to 108s kind of up here, but on the daily chart you can see we had exhaustion on the left shoulder, pullback to end of trend, flush patterns and so on, and as soon as it broke support here we were likely in a downtrend. I did not see this kind of weakening so much. I saw it maybe catching at 100 but not going down to 93s. That was a surprise. But on the downside here we have exhaustion selling, bullish divergence has now come in. We've got a blue professional down bar. We've got to make pullback to end of trend on the daily chart here, but I think there's a chance of finding some support around here. And I'll show you the commitment of traders numbers in a while, and that just shows that I think there is inherent strength in crude. So that's why I'm kind of holding on to this. Copper, no. We said 333 was a critical place that we needed to break out here, and it didn't happen. And we've fallen through support here, kind of making new lows or in this sequence. We've got to make pullback to end of trend on the daily chart now. We've got pullback to end of trend to make on the weekly. I was calling this too early. We hadn't finished with this entire move kind of down here, and we need to see more blue professional down bars on the weekly chart here. So this, copper is, an important industrial metal. This, if the world economy was strong, copper would be strong. This is showing that copper is kind of weak. And then let me just show you the commitment of traders on those three charts. So there is some inherent strength in silver. That's why at some point, we're trying to find a bottom in silver. It's just not right yet. So this is showing the commitment of traders is strong. Gold, same deal, kind of strong here. So it's down a little bit, at the moment, but I still think inherently there is, a chance for gold and silver to kind of rally into, find a low and rally back, but it's not quite yet. Here's copper. Very weak in terms of the commitment of traders chart, kind of -14 kind of here. But crude, totally different, +18. You can look at the bullishness in terms of crude, or the way the commitment of traders is positioned. For me, that's kind of showing that there's inherent strength in the crude, and that's why I'm holding on to this position on crude, because I think longer term, crude's going to break to have another go at whatever 200 or something like that. So that's why I'm holding on that, but it's painful at the moment. Okay, then, so if the money's not kind of flowing into commodities, not into precious metals, where is it flowing? Well, equities. And we've broken up to new highs. You can see on the daily chart here, that weakness we had the week before last, just with these blue professional bars. I mean, this has been a little bit of a pattern all the way through. As soon as we have blue professional down bars with any kind of weakness here, just catches them, we race back up. This double pattern here, this one here, if you look at the amount of selling that actually happened, I mean, these were decent digs down. I mean, this is, for a healthy market, you need you need a good deal of swings backwards and forwards. If everybody's positioned on one side of the boat, it gets really unstable. So we're going through, everybody's talking, is this a bubble, isn't this a bubble? It's a bubble. It's like there's no selling. Healthy markets will show a good deal of selling, allowing people to get kind of shaken out of the market and take positions the other way. There's been only one kind of game in terms of equities, and I don't like it. But this move down through here was so shallow in terms of selling. The blue professional bars kind of come and we break above the highs of that. So, we're setting off into another uptrend in terms of the daily chart above resistance here. And, 1800 psychologically is a really important number. I've no doubt we'll slice through it like a hot knife through butter sometime next week, Monday, Tuesday. And we're above resistance on the weekly chart. We've got to see pullback to end of trend before it's all over on this kind of time frame. I know we've had exhaustion patterns here and so on, but we need to see blue professional up bars, professionals taking profits on a blow-off move, and they did here at this point. We had a little bit of a decent sell-off here, but they picked it up here. They just picked up this little down move here, and we just raced away to new highs. So that's what's going on. Yet the money appears to be flowing all into equities and not into bonds. So bonds I see is just very weak at the moment. On the weekly chart, last year, during 2012, there we go. It was a big pattern on the weekly chart. Pullback to end of trend, exhaustion pattern, first bearish divergence, then a flush, bang. That was it. That was into the beginning of this year, and then we've had this move down. Now, for the time being, we've held at cyclical support here, but we've not seen any blue professional bars at the lows. That was a decent selling move down through here, but it was not an exhaustion pattern. And what we've seen in the last week was an amateur up bar in terms of the weekly chart here. This blue professional bar is really key. That was, again, I think that was the Draghi. Maybe this one was Draghi. I can't recall which one of these blue professional bars was Draghi was speaking and Yellen was the next day maybe. And this is absolutely key. So we bounced off this support level at the time being, but all we've done is come back into that zone, and I think we're going to slice through there. I just see the bond market is just weak at the moment, and breaking through support here will take us back into. At some point, we'll wrap around these two, the fast and slow line and better sine wave will cross. We'll have the cyclical energy. We'll start to wrap over on the weekly chart to the downside, and I think we're going to press to new lows because we've not seen blue professional bars pick it up at the lows here. So expecting that to kind of be an important level to break through sometime this week. If you look at the 10 years, so that's the 30-year, this is the 10-year, similar type pattern. We bounced back a little bit stronger on the 10-year, but it was an amateur bar here. Again, this was this kind of big pattern, pullback to end of trend with exhaustion, bearish divergence, flush, and then we're moving into a downtrend. So it's been a flush signal on the way up here, and because we have not had blue professional bars or an exhaustion pattern on the weekly chart, this is not over on the downside. So my guess is that, again, this blue professional bar is very important. We'll need to continue through the support level here, break into another downtrend on the 10-year daily chart. And again, looking at commitment of traders, here's the weekly chart SP contract. So I don't look at the E-mini, I look at the SP for the long-term positioning on commitment of traders, and look at this, 21 is the reading here. We had two nice little warning signals, but when the warning signals come in for the crash warning indicator, what you want to see for a confirmed correction or crash is all of a sudden the commitment of traders numbers start going in this favor all at once. We had a little bit of weakness, but then we bounced back so damn strong that we're just kind of cruising up here to new highs. So we're going to have to put in a whole lot of kind of testing patterns before this thing's all over in terms of commitment of traders here. And then if you look at the bonds, here's what's happening. Commitment of traders showing weakness. This is on the 5-year, very weak here. This is on the 10-year, weak. And then on the 30, same. Look at that was last week's pattern here. There was a little bit of support, bullish divergence patterns here, but they've not done anything to stop it, and that's a kind of a weak pattern. So commitment to traders on the bonds is showing that there's kind of weakness kind of going on there, but in equities it's very strong. So there we go, a quick romp through some charts, and I think we'll have a little bit of strength in dollar index. It's not an uptrend, I would say. I just think it's some temporary kind of strength for a couple of weeks, and that will support the move into equities. I think there's support for the UK market as well. But if the money is flowing into the US market, it's not flowing into bonds. I think the money's flowing out of bonds. From what I can see on my charts, the downtrend in bonds is not over yet. So there we go. Hope that was helpful to you. Just keep sharp next week, and let's see where we head to. Hope your trading's going well.